Thanks for coming on the programme. So it looks like high costs are filtering right through the entire economy. Food, energy, non-energy services. That's a big concern.
Indeed, and it'll probably get worse before it gets better. Eurozone inflation is not accelerating anymore, but it remains very high. We think it will remain high. It'll probably go a little bit higher still. We think headline inflation could hit 10% in September. Core inflation is probably going to increase further. So, it's looking ahead to next week's ECB meeting. We now look for a 75 basis points hike, which I suspect is now the consensus. So, yeah, it's still quite bad out there. Inflation numbers are high and policy is tightening.
You talk about your expectations for what the European Central Bank will do next week, but tackle inflation, push up the cost of borrowing. They're really in a tricky spot here, aren't they?
Very much so. What we have in the Eurozone now is sort of very close to sort of a form of stagflation, right? You have slowing growth, but inflation remains high. That's a very difficult situation for monetary policymakers. Things will get better towards the end of the year into 2023, but so right now, all eyes are on inflation. The European Central Bank really has to focus on inflation, and therefore that's why they will continue to raise interest rates.
Well, considering, too, soaring energy prices, we're on the fast track to recession, aren't we?
Probably so. We think the Eurozone is now in a technical recession, a relatively shallow recession, but a recession all the same. We're hoping that the labor market remains resilient. We still believe that. But yes, we think that GDP in the Eurozone is now falling.
And what about labor markets? Because all across the Eurozone, they're a worry too.
Yeah, I mean, up until now, the labor market has remained relatively resilient, even as sentiment has taken a hit and, uncertainty has increased after the war in Ukraine. The labor market has been resilient. We think that continues. But in Germany, we're already seeing signs of rising unemployment. And we think that probably continues in some of the other European economies in the second half of the year. But overall, we're still quite upbeat on the labor market, relatively speaking, even as output falls.
You've given us those words of doom: stagflation, technical recession. If we do slip into a formal recession, is it going to be a hard landing?
I mean, I suppose when you have a recession and interest rates are going up, I mean, that is, I suppose, the definition of a hard landing. We think the economy will rebound pretty quickly next year. I mean, in a way, what the Eurozone economy is living and going through now is a shock. The war is a shock. The curtailment of Russian energy supply is a shock. But on the flip side of that, the economy will adjust eventually, and then we think there's foundation for growth. But it'll be difficult in the next 3 to 6 months for sure, because winter is coming literally, and therefore you could see further rise in gas prices, especially if you get cold snaps. So it'll be difficult, and for both consumers and firms.
Winter is indeed coming. Claus Vistisen at Pantheon Macroeconomics, thank you very much.